it's about that time. It's the time for the IRS train wreck of the week. This is the segment of the show where we talk about somebody who came into the office and, frankly, their tax situation was a complete mess. It was a train wreck, and we talk about what happened and how we resolved it. In this particular case, I had a nice couple that had come in, and they hadn't filed tax returns for about 5 years, I believe. And they ended up, one of the biggest problems that they had was an early withdrawal from a 401k. I mean, this is pretty common, right? They have some kind of an emergency medical situation. Sometimes people do kind of interesting things with early withdrawals. They'll make an early withdrawal from their 401k to pay off their house, for example. And it leaves me scratching my head. It's like, okay, you have to pay the tax on that.
How ironic is that? My husband's calling, and he took money out for a Ponzi scheme. But that's another whole story for a different show.
Oh, Chris, you're getting laid out right here on the air. Anyway, so they do things like they sometimes take out early withdrawals that are inappropriate. In this particular case, they ended up owing a tax balance of $50,396. And we filed an offer in compromise, and this was not one of those offers that I typically do. Okay, so it wasn't one of these offers where we were offering $500 or something like that.
Right. Because that's a pretty strict penalty, right?
Well, no, I mean, sometimes $500 offers are appropriate. But
I mean, like when somebody withdraws from a 401k.
Well, but that doesn't really impact this. Really, remember, to calculate the amount of the offer, you take monthly disposable income times 12 plus assets, and that equals the amount of the offer. So a quick example is $100 in monthly disposable income times 12 is $1,200. Let's assume they have no assets. Offer amount would be $1,200. Mm-hmm. In this case, I believe they had assets that were worth about $19,587. Mm-hmm. I remember that their monthly income was really low. So in that equation, their monthly disposable income was zero. But when we got to the assets, their assets were worth $19,587. So we went ahead and we offered that amount. So almost $20,000 on a balance of right around $50,000, and this is rare. The IRS came back and accepted that offer as filed. We had to provide some additional documentation and whatnot, but they accepted it as filed, and they now have 5 months to go ahead and pay that balance.
I was going to say, did they have to stroke a check and like pay off some stuff, or so they got 5 months to pay?
They had already put down 20% of that offered amount, so that was maybe close to $4,000, and then they have 5 months after formal acceptance of the offer to pay that balance. So it worked out really well for them, and I know that they're really pleased. It's not, 5 cents on the dollar, but not every case is like that.
That's right. Yep.